76% of Americans live paycheck to paycheck. Is that you? I'm the CEO of 5 different companies. I wasn't born into it. We lived on welfare, but I wanted more. I created this show, The School of Wealth, helping people escape poverty like I did. I want to help you out of that consumer debt, teach you how to increase your credit score, teach you how to make more money at your current job or your current business, and then how to actually create generational wealth without changing your lifestyle. It is going to be a lot of fun. This is not like regular school. Hey, I'm Ronnie Lambeth, and this is the School of Wealth. Hello, my friends. How are you today? Happy Thursday. If you're listening to this on the podcast, it is a Wednesday you're listening to this, but I film and I record live every Thursday at 5 p.m. Pacific Standard Time. So if you want to be part of the show, call in, log on, YouTube, LinkedIn, Facebook, Instagram, whatever your favorite is. So you can log in on, if you're on Facebook, you can log in, ask questions. But if you're listening to this on your favorite podcast app, it is airing on Wednesday. So happy day to you, regardless of when you're listening to it, whether it's morning time, afternoon time, or evening time. Glad you're here. All right, today is going to be a fun show. I'm going to be talking about how the FICO credit score is created and calculated. And this is something where a lot of people get confused. And there's a lot of confusion on credit scores. And part of it's because there are lots of different credit scores. There's Vantage credit scores, Trans Risk credit scores, FICO credit scores. And then in FICO, you have FICO model number 1, model 2, model 3, all the way up to FICO model 10. And then on top of that, you have scorecards inside the different models. And there's over 4,000 different models with the scorecards. So it's no wonder it's confusing, right? And then adding on top of that, you go to freecreditreport.com and it gives you one score. You go to myfico.com, gives you another credit score. And then you go to Credit Check Total, or you go to my website, Credit Mojo, or you go to Credit Karma, and you get different scores. It's because there's different models and softwares, just like iOS versus Droid, right? And there's different types of those softwares in there. So we're going to talk about that today. We're going to talk about the 5 things that make up your credit score, how you can improve your credit score. So if you're tuning in now and you have questions, type them in. We'll answer them as I go. So what I'm going to do today is I'm going to go over those 5 areas. And then after each area, I'll open it up for questions and I'll answer those questions based on the area that I was talking about. So for example, the first thing I'm going to talk about is payment history, which is 35% of your credit score. So if you have a question regarding payment history, we'll put it in there and I'll answer it. If I'm talking about payment history and you ask a question about inquiries, I'm going to have to ignore it so I can get through all 5 categories. Okay. If you ask me any other question regarding credit repair, etc., I'm going to have to ignore it until I get to the end. Once I'm all done talking about FICO, I'll go back through and I'll answer those questions because I just want to make sure that I get through how the FICO score is created. All right. With that being said, if there's any time that you need help with your credit, with your finances, your taxes, maybe your retirement accounts or your insurance policies, give my office a call. And my producer, Chastity, if you can put that up there. So put the number up there. It's 1-800-475-7267. That is the number to the office. You can also go to my website, ronnylambeth.com, and sign up for a free consultation. So let's get started with the FICO pie chart, the 5 areas. FICO, what is it? Well, it's a company created by Bill Fair and Earl Isaac a long, long time ago. One was a mathematician, the other was an engineer. And they created this algorithm that predicts the future. It's extremely accurate. In fact, it is so accurate at predicting the future of whether or not you're going to be late in the next 2 years that 90% of the world's banks rely and trust FICO. And FICO has created billions, I said billions, of credit scores. And how do I say that? What's the word I'm looking for? I don't know why, but lately I've been having trouble with my words. I want to say something and I say the wrong word, and I'm not sure what that is. It's not Tourette, but it's something in there. But unlike see, that's not the word I'm looking for. FICO's scores are not free. So that's what I'm trying to say is something about popular belief. I don't know what it is. But FICO scores are not free. Anywhere you go and get it, it's not free. So if you go to Credit Karma and you get a credit score for free, it's not free. Credit Karma is paying Experian for that score. And if you get a FICO credit score somewhere from a mortgage broker, it's not free. They paid for that score. What is the score? The score range is 300 to 850. So there's a 550 point difference. The worst credit score you could have would be a 300. The highest would be 850. And apparently my producer, Chastney, doesn't know how to do math very well. It's 550, Chastney. If you're watching this, she put on there 500 points. I'm just teasing her. Got to keep her on her toes. So FICO scores are 300 to 850, which is 550 points total. Now, here's the thing. The lowest credit score I've ever seen out of thousands and thousands of credit reports, and I say thousands, I'm not exaggerating at all. My company pulls 5,000 reports a month. So we've been in business 14 years. So what's that? 60,000 reports a year. I don't know, 750,000 reports we've looked at. So almost 1 million credit reports. So when I say the lowest credit score I've ever seen is a 400, there's a little experience there. Okay. So if we do that, we figure the lowest credit score is 400. The highest credit score that we generally see is around 800. Yes, you can have a high credit score of 805, 820. Mine right now, I think, is 809. The moment I use my credit cards a little bit, it'll drop below 800s. That doesn't mean you can't have an 850. It's just extremely rare, and you're not going to have it for very long. Recently, I was on a Clubhouse, and this lady, who's very popular, by the way, right now in Clubhouse, she kept saying she's had an 850 credit score for 10 years, which is ridiculous, okay? Because the moment you don't use that credit card, you go over 1% utilization rate, your score is going to drop. The moment you get an inquiry, it's going to drop. The moment you get a new car loan. So yes, it is possible. But for sake of argument, let's figure 400 to 800. That's really your spread, 400 to 800. Now, I want to go over what that means to a bank. And what I mean by that is if you go in and you apply for a loan and they look at your credit score and it's a 660, what does that mean to the bank? Does that mean you're somebody of your word, that you pay your bills on time, that if you say you're going to pay, you're going to do it? Does that mean you're a bad person because you're not an 850? What does that 660 mean? So if you're not driving, I want you to do something. I want you to write down 300 and then write down 850. And then I want you to put periods between the two zeros. So it should look like 30.0. And I want you to put a period between the 5 and the 0. So it looks like 85.0. So it's 30.0, 85.0. So I want you to look at the FICO score that way, 300 to 800, but it's actually 30.0 to 85.0. And then I want you to put a percentage sign behind the 300, put a percentage sign behind the 850. So it should read 30% to 85%. 30% to 85%. This is what it means relatively. Okay, that's not exact science. Yes, I'm a certified FICO credit professional. No, FICO will not tell you this. No, no one, you're not going to see or hear this anywhere else unless they're listening to me and they're telling you. But your 300 to 850 score really represents a 30% to 85% likelihood of you paying your bills on time. That's all it means. 30 to 85% chance. So if you have a 660, there's a 66% chance or likelihood you will pay your bills on time over the next 2 years. The more you pay your bills on time, the better you manage your credit cards, the less inquiries you get, the longer you keep your loans open, the higher the credit score, which represents a higher likelihood of you paying your bills on time. Why doesn't it go over 850? Well, some credit scores do. Some credit scores are 999. But if you look at it this way, the best case scenario is an 85% chance you'll pay your bills on time. And again, that's not exact science. It is just a rule of thumb. So you can understand what that score looks like. So now if you're a bank and you're just looking on paper, or if you're using your automated underwriting system, they'll just reject you based on the score. See, you will never get approved for a loan because of your credit score. Let me repeat that. You will never get approved for a loan because of a credit score. You will only be denied for a loan based on your credit score. You'll never get approved for a credit score. You will only be denied for a loan based on your credit score. Let me explain that. If you had an 850, so if you're like this woman on Clubhouse that goes around giving out advice about credit, and you've had an 850 credit score for the last 10 years, and you go into the bank and you're like, hey, I got an 850 credit score. I want a $5 million house. Cool. Well, let's see your tax returns. I didn't file taxes. I don't make any money. Well, let's see your pay stubs. I don't have a job. Well, let's see your retirement. I don't have any retirement. Well, how about a down payment? I don't have any money. I got an 850 credit score, though. And you know what? I want that $5 million house. What's the bank going to say? The bank's going to say, sorry, but no. Because you have no way to pay the loan back. But I'm good for it. I got an 850 credit score. Give me the house. Give me the money so I can buy this $5 million house. I want it. I watched the movie The Secret. I'm visualizing me living in the house. I write down my goals in the morning and the afternoon, and I read it. I'm manifesting that house. I got the 850 credit score. You're not going to get the loan. I know that's an extreme example, but it's true. You will never get approved for a loan based on your credit score. You only get denied. Now, let me back up a little bit. I got $2 million in the bank right now. I got $1 million in the 401k. I have a great driving record. I have a great job, but I want to buy a $5 million house. And even though I got $2 million in the bank, that's going to be a $3 million loan, but I'm only making $100,000 a year. I won't get the loan because I don't qualify. Now, let's say that I got the down payment. I make $1 million a year, but I got let's call it a 639 credit score, and the minimum's a 640. I'm going to get denied because I need a minimum 640 credit score, and I only got a 639. So that's what I mean by You'll never get approved based on your credit score. You'll only get denied. Okay. So that is the FICO range, 300 to 850, 30% to 85% likelihood of you paying your bills on time. So let's get into the very first part of the 5 FICO pie chart, or whatever you want to call it, the FICO areas. Okay. Number 1 is payment history. Payment history is 35% of your credit score, or roughly 192 points based on the 550 points available. Now, if you only got 400 points available, it's going to be a little bit less than that, but let's just run with 192 points. Payment history. This is all of your payment history from the moment when you first get a credit report at age 18 or so, and you can actually have a credit report prior to that, but let's just say 18 until 48. So maybe you've had a credit now for 30 years. Your payment history over that time. What happens with your payment history, though, is accounts generally fall off after about 10 years without making payments on it. If you had an account that was open, you paid off the car loan, paid off your student loan, closed a credit card or whatever, it's going to stay on there for about 10 years and then it'll fall off. Negative payment history will stay on for a maximum of 7 years. Negative payment history is a maximum of 7 years that it can report. Doesn't mean that it has to be on there for 7 years. And this is a funny thing. When I go and do these live seminars, speaking engagements, I always get the question, but I thought it had to stay on there for 7 years. No, the law says it can stay on for 7 years. It doesn't say it has to stay on there for 7 years. So negative payment history will report for up to 7 years. Positive payment history generally reports from 10 to 20 years after the account was closed. Okay. So payment history is 35% of your score. That's the positive payment history and the negative payment history. There's not a lot you can do to change your positive payment history. I said not a lot. There's really one thing that you can do, and that's really it, to change the positive payment history. Negative payment history is what I've built an entire business around. Fixing people's credit or removing late payments, charge-offs, collections, short sales, judgments, foreclosures, repossessions. Remove it. Remember I said the law says it can be reported for up to 7 years. Doesn't say it has to be reported for 7 years. It just can be up to 7. What does that mean? That means, let's say that you have a late payment on a car loan 2 years ago. Maybe you went 90 days past due and they repoed the car. And you reached out to me and you called the 1-800 number and you're like, I got to get my credit fixed. I got this repo on there. I got to get it cleaned up. Now, what you'll find is we're not going to ask you, were you late? We're not going to ask you, did you make your payments on time? Did they actually repo it? What was the story? Were you split up with your wife? Was it your boyfriend? Whose fault was it? Did you lose your job? Did they not send you the payment? We're not going to ask you any of these questions because it doesn't matter. It doesn't matter at all. The reason it doesn't matter is unless you are a victim of identity theft and you have proof or you're willing to file a police report, why the late payments are there really don't matter. Because what I'm going to do is we're going to look at your credit report. And if you bought that car at a car dealership and you financed it at the dealership, it is almost 100% likely that it's going to be reported as an auto loan. So you went into the car dealer and you bought the car and you financed it with the bank that the car dealership recommended. I'm going to say that 99.9999999, I've never seen it reported correctly, but there's a chance they might report it correctly. But they're going to report it as an auto loan. And then whether you went a year, 2 years, 3 years, whatever, and then you missed a payment, I don't care why you missed a payment. Here's why I don't care. Because they're reporting it as an auto loan. Now, you might be thinking, well, that's what it is. I got a loan for an automobile. I bought it at the dealership. Why are you even talking about this? Like, it's an auto loan. But it's not. The reason it's not an auto loan is because you got it at a dealership, and the dealership sold the retail installment contract that you signed with the dealership to the bank. The bank issued you the auto loan based on a retail installment contract. Now, what's a retail installment contract? A retail installment contract is a contract or promise to pay to a retailer. See, the car dealership is a retailer. And when you do that loan paperwork, have you ever noticed it doesn't say Bank of America on it, Wells Fargo, Chase, General Motors, Chrysler? No, it says the dealership's name because it's a retail installment contract with the dealership. And then the dealership, the reason they pull your credit so much is they're trying to find the best bidder for that loan. See, the dealership is the original creditor. The dealership is the owner of that contract, and then they sell it to the bank. And if you read the Fair Credit Report Act, it states that the information reported must be accurate. And the fact that it's being reported as an auto loan when it's really a retail installment contract, that violates federal and state law. And that is how I would go after getting that repossession or the late payments removed. Nothing to do with the late payments. It's the fact that the bank is reporting it illegally and it's inaccurate. So 35% of your payment history or 35% of your credit score is based on payment history. And that's a few examples of some payment history. Let's see if I can get some questions here. I got to find out. There it is. So I want you to ask any questions you want regarding the payment history. And again, it's positive payment history and negative payment history. And that is just an example of how we can get negative payment history removed, whether it's a late payment, a charge off, a collection, a short sale, a repossession, collection, foreclosure, I don't know, whatever else is on there. Okay. So Jenny says, how do I get a charge off taken off my credit report? Pretty much the same way. A charge off is a negative item, and that's generally when you go 6 months without making a payment. The bank will then charge it off. That doesn't mean you don't owe it. A lot of people think that. Misconception. That was the word I was looking for before. Unlike popular belief, the misconception is a charge off means you don't owe it. No, that just means the bank wrote it off so they don't have to pay taxes on that. But you still owe it, and you'll owe that money the rest of your life because there is no statute of limitations. So how do you get a charge off removed? The same way. We're going to go in there and look and see if it's, say, a charge off on a credit card. I'm going to go and dispute the inaccurate account number. Let me ask you, how many numbers are in your Visa account number, your Visa credit card? If you're not driving, pull out your credit card. Tell me how many numbers. I know it starts with a 4 because it's Visa. If it was MasterCard, it would start with 5, right? That's how you know. So it starts with a 4. How many numbers are there? There's 4 sets of 4 numbers. There's 16 numbers. Thank you, Melissa. Melissa is on Facebook and she said 16. Prize for Melissa. Thank you so much. 16 digits. If you looked at your credit report, Jenny asked, how do I get the charge off removed? How many digits are they reporting on the account number? Remember, the Fair Credit Report Act states that if they report, there's no law that says these banks have to report anything. It says if you report, the information reported must be 100% accurate. If it's a 16-digit account number and there's only 4 digits reported, is that accurate? No. So that's how you get it removed, is you go after you dispute the validity or inaccuracy of the account number. Okay. So I think, Chastity, we have any more? Here we go. How long does it take to remove negative payment history? Well, payment history can show up for 7 years. It can show up for 7 years. How long does it take? It just depends. I mean, I've deleted bankruptcies in as little as 21 days. I've deleted late payments in as little as 15 to 20 minutes. It just depends on the case and scenario. On average, though, people that hire me have that want to buy a house, for example, because most people that hire me want to buy homes. And so this is a good number for you. 50% of the people that hire me can buy a house within 90 days or less. 90% of the clients within 6 months or less. So what takes your average credit repair company 22 to 27 months to do? Their numbers, not mine. It's right on their website. The largest credit repair company in America has got it right smack on their website. 22 to 27 months at $110 a month. You do the math. And for us, it takes, on average, 90% of the time, less than 6 months. What else we got for question, Chastity? After 2 years of excellent payment history, does your FICO score jump up? It doesn't. It does increase. But the way you ask the question is a great question, Greg. Greg from Facebook, he's got jump up in capital, as in like jump up, like a lot. It doesn't jump up. It does increase, though. Generally, it's at 4 years, 49 months that it jumps up, that you see a significant increase in your credit score at the 49th month. 24 months is the break-even point. What I mean by that is 90% of all late payments, 90% of all late payments happen within the first 2 years. So when you first open that account, you kind of start out negative, if you will. And every month that you make a payment, your score comes up a little bit. You make a payment, your score comes up, make a payment, your score comes up. So eventually at the end of that 24th month, your score has come back up to where it was prior to opening the account. And again, it's different for everybody because everybody's in different scorecards. But on average, about 25 months is when you break even. And then every month after that is when, or 24 months is when you break even. At 25th month, it will go up, and then it goes up generally every month after that, which is why it's important to not pay off car loans early or student loans early or any loan early. And I'll get into that when we talk about length of credit history. All right. So Matthew from YouTube says, thank you for all the game you give us. Appreciate that. Is there any way other than authorized U accounts to boost your payment history? No. And that was the way that I was referencing or kind of insinuating about earlier, that there's really only one way to edit your payment history that you guys can control without removing negative payment history. And that is adding authorized user accounts to your credit. An authorized user is this. Someone adds you to their credit card as an authorized user. You're not a cosigner. You're an authorized user. What that does for you is their payment history will then show up on your credit report as a positive trade line. So if they've had a credit card open for 10 years, for example, and it's still open, and they add you as an authorized user, that credit card will show up now on your credit report with 10 years of history. And it makes it look like it's been open for 10 years. And I've done this with my grandson, and I've done this for thousands of people where we added them to our credit cards. It's one of the services that I offer a lot of my VIP clients and celebrities, etc., where we put them on my credit cards, and then they get my history. And then once their score goes up, we get them their own credit cards, and I take them off of mine. So that's about the only way, Matthew. So great question from YouTube. Christy from Facebook says, if you can't get multiple late payments corrected on closed student loan, what hurts your credit score more? Late payments sitting there or removing it and losing that history? Man, that depends. And you're going to find me say that a lot because there's really no specific answer without seeing everything. If I had your credit report in front of me and I can look at everything and I can put it in the algorithm and mess around with the scorecards, I could give you a specific answer. And I know how to do that. I can actually log into FICO's website and actually put your information in and manipulate it, and it give you a plus or minus 5 points credit score. So I know how to create the algorithm and the scorecards to do that. But without seeing it, I'm going to guess here, Christy. It depends. It depends on how many other positive trade lines you have. So if the student loan is your oldest trade line, your only trade line, and you've been positive on it for the last 4 years and you got late payments from 4 years ago, removing the account will have a substantial impact on your credit score. Now, other scenario, you got tons of good credit. Nothing else is late. Credit cards are not maxed out. You got this old student loan. You were late last year. Yeah, we delete the whole student loan. You're not going to see a hiccup on your credit score at all. It'll probably go up. So great question, Christy. Thank you from Facebook. All right, let's see if there's anything else here. All right, so let's get into, see, there's a bunch of other questions here regarding other things. So now we're going to now we're going to go to 30% of your credit score. So 30% of your credit score is based on what types of credit you have. So 30% of that 550 points. So what is that? 165? I think that's 165 points. 30 times 550, I think that's 165. So 30% of your credit score is based on what types of accounts you have. Here's what FICO wants to see. They want to see a mortgage. They want to see a car loan or an installment loan. And they want to see 3 credit cards, but I'm holding up 5 fingers. 3 credit cards. Car loan, installment loan, car loan, installment loan, doesn't matter, motorcycle loan, student loan, as long as it's installment loan and a mortgage. They want to see those 5 things on your credit. Now, does that mean if you don't have a mortgage, you can't have great credit? No, that's just what FICO wants to see. So give me an example. In December 1st, 2012, I bought a house. I bought a house in Lake Tahoe, and my credit was pretty good. I think it was like 760 or so, somewhere in there. And the following month in January 2013, I got the loan from Wells Fargo. They then reported that I had a mortgage. My credit score increased 25 points. It went up 25 points because of the mortgage. Now, if I would have got a car loan, my score would have probably gone down 25 points. If I'd have got a new credit card, it would probably gone down 25 points. But because I got a mortgage and FICO wants to see a mortgage on there, score went up 25 points. Why would FICO want to see a mortgage on a credit report? Remember, what is FICO trying to do? They're trying to predict the future of you missing a payment over the next 2 years. That's all they're trying to do. What is the likelihood of Christy from Facebook missing a payment over the next 2 years? If she has a mortgage, because we've looked at literally hundreds of millions of credit reports, and we created billions of scores, we know people with mortgages are less likely to miss a payment than people that don't have mortgages. Therefore, if there's a mortgage on their credit report, put them in this bucket or scorecard, which then inflates the credit score 25 points. So again, they want to see a mortgage, an installment loan, and 3 credit cards. That's what they want to see on your credit. Now, what if you have 4 credit cards? That's fine. 5 credit cards, that's fine. What if you have 10 credit cards? At 10 or so, and again, it's all different depending on your scorecard you're in, but around 10, there is a FICO code that says too many revolving accounts. That's generally caused when you have a bunch of credit cards that are open that you're not using. I've never seen a negative impact on a credit score for too many credit cards if the credit cards are all being properly used. If they're not carrying balances, as in you're not using them at all and there's inactivity, that will have a negative impact on your credit score. Okay. If you're going over that 10% utilization rate, it will have a negative impact on your credit score. But they want to see at least 3 credit cards. Well, what if you only have 2 credit cards? Well, FICO wants to see 3. And I get this question all the time when I'm doing these speaking engagements. Rondi, I got 1 credit card. So what if I only have 1 credit card? Well, FICO wants to see 3. What if I don't have any credit cards? What then? Well, FICO wants to see 3. What if I got 5? That's cool, but FICO wants to see 3. So if you don't have at least 3, go get 3. If you don't know where to go and you have bad credit, go to my website, rondilambert.com, click on credit cards. We got 5 or 6 banks. It's a live feed. They don't even care what your credit score is. They're going to give you a credit card as long as you're not currently in bankruptcy. Okay? So they want at least 3 credit cards. They don't care if they're secured credit cards. They don't care if they're retail card like Kohl's or JCPenney's or Victoria's Secrets or whatever, the Gap, Old Navy, or Bass Pro Shop. They don't care who owns the credit card or who's providing the credit card. They just care that you have a credit card, at least 3. Why? Well, the reason why is FICO has figured out over the last 50 plus years. So they were created in 1956. So what is that? 70 years, right? 65 years they've been in business. Their first score model was created in 1990s. The second one, which is what all mortgage companies use, which is FICO Model 2, which was developed in 1996. And I think it was 1989. Or 1992, I'm sorry, that the government said they have to use FICO when they issue mortgages. Okay. FICO's figured out, after creating billions of scores, that people with 3 credit cards with less than 10% utilization rate have a much lower likelihood of missing a payment. That's all this game is about. What is the likelihood of you missing a payment over the next 2 years? You got a mortgage, it's going to go down. If you got 3 credit cards under 10% utilization rate, less likelihood you're going to miss your payments. And so score goes up. Okay. So let me answer some questions on 30%. If there's any in there, Chastity, pull that up. So any questions regarding the 30% on how credit cards impact it. Now, here's something you should know. Credit cards are the most important thing on your credit score. The absolute most important. Now, I just said that payment history is 35% and types of credit's only 30. You're like, well, 35 is more than 30. But your payment history is also based on your credit card payment history. Your utilization rate is credit cards. How many credit cards? All of that. So credit cards are literally the number one thing on your credit report for your scores. Because FICO's figured out people that know how to manage their credit cards properly are a better client to loan money to, because they're more apt to pay their bills on time. That's all it is. Okay. So whether you like credit cards or not, it's irrelevant. FICO doesn't care if you like credit cards or not. Sorry, Dave Ramsey, but FICO doesn't care what you think about credit. The score is the score. It's like gravity. Regardless of what you think, if you jump off a building, you are going to fall, period. So you can either complain about gravity or just get on board with it and learn to work with it, okay? Kelly from Facebook says, is a line of credit on your bank account considered a credit card? It is a line of credit. So a credit card, it doesn't show up on a credit report as credit card. It shows up as revolving line of credit. So great question from Kelly on Facebook. And the answer to that question would be, if it reports, so if the line of credit on your checking account, like an overdraft line of credit, for example, if it reports to your credit report, then yeah, that would be essentially a credit card, a revolving line of credit. Most home equity lines of credit will show up as revolving credit cards or revolving lines of credit card, otherwise known as a credit card. So yes, a line of credit on your checking account, like overdraft protection, if it was reported on your credit report, would most likely show as revolving, and that would be the same as a credit card. And so you want to treat it like a credit card. So great question, Kelly from Facebook. Thank you. AH from YouTube says, with that being said, how long will it take for your FICO score to be restored and start bumping as a result of doing an inquiry for applying for that third credit card? So a couple questions in there. If you only have 2 credit cards and you go and you apply for a third credit card and you get approved and then it reports, the points that you may have lost due to the new hard inquiry will be replaced by having a third credit card. So I'm just going to make this up. Let's say it's 100 points. And in order to get a 100-point maximum score, you need 3 credit cards. So 33 points per card. Let's just make this up. Make it easy. And you got 2, so that's 66 points. You get a third credit card that pushes you up 33 points, but you lost 20 because of the inquiry. You still gained 13. And I just made those numbers up. That's not how it works. Those are not the exact numbers, but that's essentially how it works. Yes, the inquiry will impact you, and I'll explain why later. But the fact that you have 3 credit cards now will boost your score. So how long? About 30 days for that card to report. Potentially. Now, it could report the following day. Why did I just say 30 days if it could report the next day? Well, here's why. Banks in general, or otherwise known as furnishers. A furnisher is a bank or collection company or a car dealership or any other type of business that furnishes data to the credit reporting agency, otherwise known as a credit bureau. So a furnisher can be a bank. So if you're with Capital One, for example, Capital One Bank, and you got a credit card and you applied for the credit card on March 17th and they approved you and they give you a $5,000 credit limit and you've never used the card because you just got approved on the 17th. And on the 18th is when they report to the credit bureaus. The 18th of every month is when Capital One reports. I don't know when they report. I'm just making that up for illustration here. You applied for it on the 17th. You got approved for a $5,000 credit line. On the 18th, they do their batch. They upload their tape, which is a technical term. They upload their tape to eOscar. eOscar then furnishes it to the credit bureaus, and they put it on your credit report on the 18th. You applied for the credit card at 11:59 p.m. And at 12 midnight is when Capital One reports. Well, it took 1 minute. Now, what happens if they report at midnight, the 18th, and you applied for the credit card at 8 a.m. on the 18th? Well, they already reported. So now you got to wait 30 days because they generally report once a month. Now, some of them report more than once a month, but most furnishers furnish data once a month. So to answer your question, how long will it take? It just depends on how long it takes for them to report it. But great question. Christy from Facebook says, if you keep it under 10% and pay it in full each month on the 10 cards, will that help build your payment history by adding more payments than just 3 cards? Absolutely will, because it's more payment history. The more payment history you have, the higher your score will be. Think of it this way. Think of the credit reporting as kind of like your driving record. The longer you've been driving with no accidents, no tickets, the lower your car insurance, right? So think of a ticket as a late payment. Think of a totaled vehicle as like a charge off. A DUI is like a collection, okay? The longer you go with positive payment history, the longer you go without having an accident or speeding tickets, the lower it's going to cost you. Okay? And there's actually scores based on your driving record. And insurance companies will pull your credit twice a year, and they determine how much you pay in car insurance based on your credit score. Why? Why would an insurance company base how much you pay on your credit score? Well, because people with bad credit are more likely to commit insurance fraud than someone with good credit. It's a fact. People with bad credit are more likely to be in a car accident than people with good credit. Fact. I witnessed this. Last week. I witnessed somebody commit insurance fraud because he was short on cash. Somebody that claims to be a devout Catholic that's got tattoos of his religion. And I witnessed him committing fraud, lying because he needed the cash. Insurance companies know this. This is why they check your credit twice a year, and they determine how much you pay and I pay based on your credit score. Oh, Christopher from YouTube says, I'm driving. Where do I get the credit cards? RondyLambeth.com. RondyLambeth.com. It's got credit cards there. So thanks for asking that question. Yes. So we, anybody who hires us to fix their credit or hires us for Fortress University, we do report up to $25,000 line of credit, or I'm sorry, it's a $25,000 loan. Shows up as an installment loan on all 3 credit bureaus. And if you live in Texas, it shows up on the 4th bureau. So we do provide the trade lines if you're a client of ours. So whether it's Fortress University, business credit, personal credit, or coaching. All right. So the next area that I want to talk about would be 15% of your credit score is based on length of credit history. So 15% of your credit score is based on length of credit history. How long you've had credit. Think of it as the driving record. The longer you drive with no accidents, no tickets, the higher your driving score, if you will. So the length of credit history is 15%. How can you change that? Well, there's a couple things you can do. Number one, you can add authorized user accounts to your file, which by doing authorized user accounts, someone else's credit will show up. Number two, don't pay off your installment loans early. This is why I say never pay off installment loans early. What I mean by that is if you got a car loan and it's a 5-year car loan and you're paying extra because you want to get out of debt to save money, which I highly recommend. If you pay off that that car loan early, that is going to adjust or impact your credit score, and it's going to lower it. It's going to impact it in a negative way because you just paid off the account. And you lowered now or shortened the payment history. Okay. You shorten the payment history. So you want to go as long as possible, extend that out. How do you do that without paying a lot of interest? Really simple. You pay extra, but you just don't pay it off. So what does that mean? If your payment's $500 a month, pay $1,000 a month. You'll have the loan paid down or paid off in half the time. But instead of paying it completely off, leave a few dollars on there, a couple $100, and then you pay $2, $3 a month until the loan matures. Think of it as like a pregnancy. Usually you're pregnant for 10 months. The longer you go, the better, right? If you had the baby at 4 months, the baby's unhealthy. It's not healthy for the mother, not healthy for the baby. It needs to lay in there and sit in there. And what do they say? The bun in the oven, right? It needs to sit there and grow. Trying to think of something funny and fancy. Say, got nothing. So think of that as a car loan. You want to go full term. Pay it down as low as possible, and then pay $1, $2 a month until it's paid off. So that's payment history, 15%. Not a lot you can do on that other than not pay it off early. All right. So the next one, it would be 10% is based on you know what? I screwed up earlier. I said 30% of your credit score is based on the types of accounts, and it's not. It's 30% of your credit score is based on how much you owe. Can't believe I did that. Damn. I've been doing this for so long on autopilot. 30% of your credit score is based on how much you owe. So when I was talking about the credit cards and stuff, it's 30% based on how much you owe. I'm sure I'm going to get a whole bunch of hate mail on that because I just realized I was wrong on that. 10% is based on 10% of your credit score is based on types of credit. So the mortgage, the car loans, and the credit cards. 30% is based on how much you owe on all of your credit cards and all of your loans, with the exception to really mortgages. See, if you got a $500,000 mortgage and you 100% financed it, FICO doesn't care. If you got a $5,000 credit card and you max it out, FICO cares. All right. So you want to keep your balance as low as possible. And in credit cards, you want to keep it below 10%. Okay. 30% of your credit score is based on how much debt you have, balances owed. And then the last 10% is inquiries or new credit. Again, 90% of all late payments happen in the first 2 years. So they punish you with new credit. Okay. So 90% was in the 2 years. So 10% of the credit score is based on new credit. You need to lower the amount of inquiries. The less inquiries you have on your credit, the less new accounts you have, the higher the credit score. So that is the FICO pie chart. 35% is based on payment history, 30% is based on how much you owe, 10% is based on types of credit, 15% on length of credit history, and 10% based on how new the credit is. I pay my child support payments on time every month in New York State, but I have a huge account or accrued balance from a few years ago, and I simply can't afford to knock it out this time. New York State's reporting the outstanding amount on my credit every single month as a closed collection. My scores are hovering from the low to mid 700s. How is the negative reporting affecting my credit score? And is there a way to dispute this even though it is reporting every single month? Yeah. So that's a tough one, Joe. And I'm going to dive into this a little bit. So you're making your child support payments on time, but you have past due balance from a few years ago that you simply can't afford to pay it in full. I would, unfortunately, there's not a lot you can do with that. Child supports things are something we generally don't work on unless you can provide us proof that they're paid in full. And even if I did fix this, Joe, and I've fixed this many times, what's going to happen is, you kind of reference it there, is we're going to get it removed, and then the following month it's just going to come back. So unfortunately, there's not a lot you can do with that except pay it off. So my recommendation is, pick up some extra work, Sell something, get a loan, put it on a credit card, start a home-based business. You got to do something to start throwing some extra money at that, because it's not really. I could go and I wave my magic wand, get it deleted, and it's right back the following month. So again, if I delete it on the 17th of the month, they report on the 18th. It's going to be back on the 18th because they're going to constantly report that. So unfortunately, there's not a lot you can do. Great question though. Sean Hanna from Facebook says, "What do you think about trying to get a handle on gambling addiction?" I don't know how to answer that. What do I think about getting a handle on it? Like, get a handle on it. I do know a little bit about the addiction. It's a huge dopium boost, just like Instagram and just like Facebook and YouTube and all the other social medias, Snapchat, etc. It's no different. Gambling, for the most part, is that boost. Just a dopium boost. I think I'm saying that right. So I recommend it. Call the 1-800 number, do whatever they tell you to do. I have a very good friend that had an addiction to slot machines, and she would, man, I remember one time she called me and she got paid and spent her entire paycheck. She didn't even make it home. And she dumped her whole paycheck into the slot machine. So it's sad. So just like with any addiction, you got to get help and get it fixed. Melissa from Facebook says, "If I have medical bills on credit, should I pay it?" Well, if you owe it, I would say to pay it. If they can prove that they own the debt, and then I would pay them 30 to 50% of what they're asking for. Melissa, if you'd like us to do it for you, we can do it for you. This is something you can do on your own. But if you don't have 4 to 10 hours to sit around on hold and try to negotiate with these guys, we'll do it for you. You're going to end up paying them about what you would pay us and them. So we charge 20% of what we save you, and we're going to get it down to 5 to 30% of what you owe. So when it's all said and done, you might pay 30 to 50%. If you pay them directly, you're going to pay 30 to 50%. So, and then we do all the work. So I'd reach out to us. Honor Transport. That's a business thing. Cool. From YouTube says, "How's it going, Rondi? What's the best, most efficient way to get a business line of credit?" The best, most efficient way to get a business line of credit, depending on what you want. To purchase new equipment. It would depend. It would depend on, the best, most efficient way. So, for example, if you bought something from me, that's an easy way. I'll give you a $25,000 loan right now. $25,000 in coaching. I'll give you a loan right now. I got a finance company lined up, no credit check, small down payment. You start making monthly payments next month. There are companies out there that deal with just equipment loans. I have friends that are in that business. That one of my friends strictly deals with semis. That's all he loans money on, semis. The guy that loaned me the money for my office equipment last year, I bought $190,000 worth of office equipment, copiers, high-speed printers, folder inserters, envelope printers, etc. He loans money on equipment all day long. Why did I borrow money, not pay cash? Because I like using other people's money. Because generally, I can borrow money for less than what I make with my investments. So great question. Devin from Facebook said, "Just started business about 1 year ago. Got my first personal credit card 1 year ago. Congrats. How do I build business credit the fastest? From what I've been told, your business credit is based on your personal credit." Well, I'm sure you were told that, but that's not correct. Business credit has nothing to do with personal credit. Think of it this way. Devin, you go out and get married. Does your wife's credit now show up on your credit because you guys got married? No. Does your business, your credit based on if you're married or not. No, it's the same thing with business credit. It has nothing to do with personal credit. It's two separate entities. One is personal, one is business. One has a social security number, one has an employer identification number. Two separate numbers. Now, do they get commingled? All the time. Why? Because people don't know what they're doing, and they go into a bank and the bank says, would you like a business credit card? Yes, I would love it. It's just a personal credit card. It's a personal guarantee. When you do it properly, there is no social security number on the application. It's not attached to you personally. Okay. Great question. Gino from YouTube. Will a requesting credit limit impact one's credit score? Potentially, but generally, no. And I recommend that you request the credit card companies to increase your credit score every 6 months. So every 6 months or so, call the company, ask them to increase your credit score. Generally speaking, it does not impact your credit score because they have access to your credit and they just pull it. It's soft inquiry at that point. Hey, that's awesome. Christopher from YouTube says he's signing up next week. That is awesome. Ken from Facebook says, follow his advice. I did. It works. Did it 7 years ago. Haven't looked back. That's awesome. He has now over an 800 credit score and just bought a Lexus. That is awesome. Thanks so much. Gregory from Facebook says, is it possible to hit 760 without a mortgage? Yes, it is. I'm in the 800s right now, and I have no mortgage. It is. Why do I have an 800 though? It's like 809 or 8 something, right? Because I have a bunch of credit cards, I have a bunch of car loans, and I have a really thick credit file and a lot of payment history, a lot of long accounts. So Melissa says, what about pay per delete? We do have a pay per delete model. My credit repair company is paid based on performance. So it's $325 enrollment fee and essentially $125 per account per bureau that we remove. So if it's a collection of bankruptcy, short sale, foreclosure, or whatever, it's $125 upon deletion. Not a monthly fee to try. It's 100% pay per delete. Hopefully that's what you meant. Kelly from Facebook says, do you make mortgage loans? I can tell you that we do have a mortgage division. And I am a licensed mortgage banker. And so I can refer you to someone that can help you. Send me, Kelly Davidson from Facebook, send me a DM and I will get you introduced to Angelo and he will get you a mortgage. Rates are whatever the rates are. They change constantly. So whatever the rates are, we don't charge any more than Bank of America or US Bank. They're pretty much all the same. You have 40% loan to value. That's going to be easy. As long as good credit score and a way to pay back the loan. Remember I said, even if you got an 850 and no way to pay back the loan, it's going to be difficult to get the loan, if not impossible. But if you have a way to pay it back and you have decent credit score, we can get you a loan. Melissa from Facebook, how long will it take to delete a medical bill with my company? It really depends. Like I said, I mean, I could make one phone call and probably have it deleted. If you go through our debt settlement division, we have contracts with most collection companies. And when you're messing around trying to figure out who to talk to, we simply can send a text message. Hey, we'll give you, let's say you have $300. Hey, we'll give you $100. I'll wire it right now. We delete it. Client's name is Melissa Johnson. Here's her social. And they text back. You bet. Done. Okay. That's how long it takes for us. A lot of times because we have contracts. So it just depends with them. Devin from Facebook says, let's do this. I'm buying the course on this soon. Cash flow is king. Absolutely. What else? That's it, Chastity? That's all we got. Okay, guys. If that's all the comments and questions, here's one. Gregory from Facebook says, if I enroll in university, do you handle business credit, personal credit, pre-approved? Yes, we have all of that, Gregory. So with Fortress University, if you're listening to this on the podcast, by the time this podcast airs, Fortress University is live. For you guys watching this live right now, participating on March 18th, it is in beta, but It's not on the website, but if you send me DMs, I can send you the link. You can sign up, you can pay, all of that stuff. It's just not on the website yet. So what is Fortress University? Fortress University is my online financial education platform. It teaches you all about credit, teaches you about taxes, teaches you about starting your own business, what to look for, what to watch out for, how to hire people, teaches you about business credit, how to establish business credit, the fastest way to get business credit, the most efficient way to get business credit, how to get funding for your business, how to get equipment loans, how to get a credit card with no social security number. It does have coaching in there. If you want, you can buy time with me. It has how to pay off a mortgage in 7 to 10 years without changing your lifestyle, how to buy exotic cars or luxury cars for the cost of a Honda Accord. All of this is included and a whole bunch more. So thank you, Gregory, for that question. That's a wrap. All right, guys. I hope you have an amazing day. See you later.